Hey, welcome everybody. This is Mark Dannenberg with Options Moneymaker. This is the Q&A session for Wednesday, April 7th, 2021. I'm Mark Dannenberg, and with me tonight is Aaron Rumley and Kristen Kane. You're going to hear a little bit more about Kristen in a few minutes, and she's going to introduce you. She's a new member of our team here. So what's the purpose of this Q&A? Well, we provide education programs for traders, for options and futures traders. And we recognize that there are always gaps in whatever type of learning there might be. People learn at different rates, people learn in different ways. And we realize that with online learning, many of our programs are on-demand courses that you can go through at your leisure. With many of those programs, there are questions that come up. So we make ourselves available, myself and the team. Michael is away this week, taking a little vacation with his family. But we make ourselves available to respond to questions that you might have. So if you're looking for clarification on any of the programs or services or products or tools that we use and offer, we're here and available to respond to those questions. So, we're very committed to a philosophy of learn to trade and then trade to earn. Far too many traders jump in immediately. They think that they know what they're doing. We equate it frequently to flying an airplane. You read a book about flying a Cessna 172 over the weekend and decide to go to the airport on Monday morning and try to fly. That's really a great way to crash and burn. We like to teach. We like to show. We like to educate. We hope to guide you through our real-time examples of trading and then help you understand when it's appropriate for you to actually put live money in so that you can trade to earn. Trading is a business, and we are here to help support your business. So topics that might come up tonight are questions about the adaptive entry system. This is what we use. This is the tool that we use every day to identify trends, identify momentum signals, impulse moves, and it was developed by New Cycle Trading and Analytics, and we represent the adaptive entry system on behalf of New Cycle Trading. Live trading room, if you have more questions about the live trading room for real-time trading and support, it's something that is available to traders throughout every market day from 8:45 a.m. Eastern to sometime between 3 and 4 p.m. Eastern is usually when we quit trading. But we take every single trade and call out every single trade on the adaptive entry system to help you learn how to identify them, how to anticipate what signal might be coming, whether it's going to be a long or a short signal, and help you optimize your experience in terms of trading. Now, in the live trading room, we primarily trade futures. We provide futures trading education, which helps you learn about the risk and reward of futures. We also provide a tool called a personal trading plan, where you can track your personal profit performance, profit and loss performance, and the personal trading plan is going to calculate for you what your run rate is. So what is your average of all of your profit and loss experiences on a daily basis, and then take that number and forecast it forward so that you have a reasonable expectation of what your income could be for a 12-month period. That's a very powerful tool and something that I think every single trader needs to have. And then we also offer an extensive amount of options education courses for those of you who are interested in also learning how to trade options. Profit Builder Plus is our core options education course that offers you an opportunity to learn right from the very basics through some of the most advanced options trading strategies, spread strategies. Now, one of the most important things we promote every single day is to update your personal trading plan. So I just mentioned the personal trading plan, and I want to share it with you here, right here. Okay, so the personal trading plan was designed with a thought in mind. I had a perception after working with hundreds and thousands of traders over the last 20 years. I had a perception that most traders are very narrowly focused on this trade or this day. and their emotions were tied extensively to how this trade performed or how this day performed. So if they have a winning trade, they have a winning day, they feel euphoric, they feel wonderful, everything's good in their life. If they have a losing trade, or a couple of losing trades in a row, or if they have a losing day, they actually start to shift immediately into, well, maybe this isn't right for me. I don't really know what I'm doing. This strategy doesn't work. These tools don't work. So there's all sorts of stories they start telling themselves over an experience of a few losing days or losing trades. And so we designed the personal trading plan in large part because back in my corporate days, I was responsible for multiple locations around the country, had about 2,500 employees, had a lot of managers and directors and vice presidents. And one of the core components of being successful in the company that I worked for was making sure that we were able to hit financial targets on an annual basis. And the only way to be able to know how to do that and whether or not we were on pace to do that was to teach the management team that I had how to interpret their financials, how to interpret their performance results, and then take their current to date performance results and project that forward and ask the question basically, if I was to continue to perform the way we've been performing, will I make my plan? Will I miss my plan? What will my outcome be? And by knowing what the outcome would be, it allows you to make adjustments so that you can tweak your performance and you can tweak your understanding and tweak your knowledge and your education and be able to achieve the plan that you desire. So I translated that same concept into personal trading plan. And Erin, all of you know Erin on our team, she did a brilliant job of creating a tool that very, very easily takes that concept and allows any trader at the end of their trading day to plug in their performance for that day. And the personal trading plan then summarizes what the year to date performance is and summarizes it in an average profit or average loss number per day. Now, as an example, we've been doing this on two different categories since July of 2020, and then we started a third category that we're tracking also. We started that category at the beginning of this year. So we have a 2021 calendar year category that we're all tracking. So when I say category, we realize that in our entire community of traders, there's a wide range of interest in trading particular times of day, interest in taking maybe some of the signals, but not all of the signals that are presented on the adaptive entry system. And that is a wide range of combinations. And so we started tracking two particular categories in mid 2020. And this all revolves around the signals that we call out in the live trading room for trading NASDAQ 100 futures contracts. This is all about trading NASDAQ 100 futures. Now, there's also a tab in here where you can track options trading, and it works exactly the same way. But we started doing this as a way to show our community that if we track all the detail of every trade, and at the end of the day, we summarize in a daily summary, and we're able to then take that summarized performance for the day and plug it into a personal trading plan, that we will have a reasonable idea of where we're headed for over the course of a year. And one of the reasons I wanted to develop this is to smooth out that emotional roller coaster that a lot of traders put themselves on. So if you had a bad day, you had a losing day, I plug it into the personal trading plan and I can see how that's going to affect my 12-month potential income. So I'm going to go through these here real quick. They're all filled in. Basically, at the end of every day, we plug in the dollar performance of the day, and it is based on $20 per point of profit or loss on NQ, and then whatever number of contracts we're trading. The personal trading plan will help you scale from starting at one contract, scale up to as many contracts as you want to trade, and it's only going to scale based on the amount of money that is in the balance of your account, and we're using a small percentage of that total balance to allocate to contracts. So in our two categories that we've been trading since the middle of 2020, we've scaled up to 3 contracts. So for example, today, Wednesday, April 7th, we earned $675 and we did 30 contracts. So that would be 10 trades at 3 contracts per trade. And this category that is labeled up here, live trading room 9:30 to noon, AES only, means that we're taking all 4 of the signals on the new cycle trading and analytics software, the AES software, but we're not taking fractals. So here's what it means. For the 39 and a half weeks that we've been tracking this performance, our winning days average 21.9 points a day, and each point has a $20 value to it. There have been 67 losing days in the 39 and a half weeks, and those losing days average 42.2 points, negative 42.12 points. So that tells us what our run rate is. That's what our averages are, winning days and losing days. And we know how many days that we've won, we know how many days that we've lost in 39.6 weeks. Then what we do, you as a trader managing your personal trading business, you come down here and say, well, okay, if that's my run rate in my history and it's for going on 40 weeks, I've only got 12 and a half more weeks left in this 52-week plan. I want to assume that I'm going to continue to trade at a reasonably similar level. So I'm making my positive day forecast from here forward for the next 12 and a half weeks, 21.9, so that it matches my run rate. And I'm making my negative day forecast 42.12. So by plugging those in, everything in blue is my history. Those numbers and values will not change. Everything in white below that runs right out to our 52-week um, uh, ending. And those are the values that are being influenced by these forecast numbers right here. We've capped out at 3 contracts. We can make it whatever we want. We can make it a maximum of 50 contracts. I wouldn't recommend 10 contracts. That is going to be an individual decision you make, a personal choice that you make based on your own comfort level with trading. And this number right here, this is the bold number that tells us what our income is likely to be for a 52-week period. In this case, we're forecasting 21.9 points a day, a negative 42.12 points on our losing days. We've lost 67 days on 39 and a half weeks. We started the account with just $5,000. We allocate 10% of the account to contracts, so the margin required for contracts. And all of that says we start with $5,000, and at the end of 52 weeks, we should have an account value somewhere around $135,000. That's a really strong number in my opinion. Now let's look at a second category. Second category is same concept, run rates, winning days, losing days, 39.6 weeks, 67 losing days in this case. But this is trading from 7 to 4. The other one was 9:30 to noon. This is trading from 7 to 4. These are Eastern times, and only taking 2 of the 4 adaptive entry system signals, the trend bias signals and the continuation signals. And in taking those 2 only, we have a positive value of 27.23. That's points per day. And our losing days is averaging 40.35 points per day. Again, we're capping it out at 3 contracts. We started this account also with $5,000 and we're allocating 10% of our account balance to the margin requirement for contracts. And this account is right now forecasting to be around $207,000 at the end of 12 months, 52 weeks, which is only about 12 weeks away. So we're very close. These values, these run rate values aren't going to change significantly now that we are down to our last 12 weeks, basically, of a 52-week plan. There might be slight variations to them every day, but they're not going to change dramatically. So we really are on pace to have a pretty substantial income, having started with $5,000 in the middle of 2020. Now, the new category started in January of this year. So we only have 13 and a half weeks under our belt. We've had 18 losing days in 13 and a half weeks. Our average winning day is 42 and a half, and our average losing day is 49 and a half. So we have those same values translated out into our forecast fields. And having started with $5,000 on the first trading day of 2021 and trading only from 8:45 a.m. to 4 or whenever we stop calling out trades in the live trading room, trading all four of the adaptive entry system signals and including fractals in there. See, this is a different configuration. Time frame wise, it's a different configuration of how to trade the adaptive entry system. There's so many different combinations of how you can trade it that we just wanted to demonstrate for you that there's a lot of variations and you have to choose your own what works best for you. So once again, account number 3, we start with $5,000, and this early into the 52-week plan where we've only got 13 and a half weeks behind us, right now the projected income trading 8:45 to 4 is $355,110. Again, we're allocating 10% of the balance of the account to contracts. We've already scaled up to 3 contracts. I can increase that if I want to, or I can decrease it. If I decided I didn't want to trade 3 contracts, I can decrease it. And the fields highlighted in blue will not change. That's in our history, that's locked. But going forward, it'll change to 2 contracts max, and that would take our potential income down to 261. What if you were really confident in what you're doing? This is just kind of becoming second nature to you. You trust the signals, you trust your own ability to follow the rules. You could change it to 5 contracts and you've got possibly $500,000 as a potential income. I really want to emphasize potential because when you're this early in a 52-week plan, there's no guarantee that these numbers won't change. Now, they won't change dramatically on it. Typically, they won't change dramatically day to day, but over a period of time, the average win rate per day might decrease or increase. The average losses might increase or decrease. But that's why we always base our forecast on what the most current run rate is. And after we get 4, 5, 6 months into this plan, these run rate values stabilize a bit more, and then we'll have a pretty reasonable idea of the range that we're going to be in for our 52-week income. But I'm going to put that back down to 3 contracts. I think 3 is a very reasonable maximum number of contracts. I also think that a $355,000 projected income starting with $5,000 is a very reasonable number also. So that's the personal trading plan. It's really important to fill that out at the end of every day if you want to effectively manage your personal trading business. All right, we're going to take questions here in just a minute, but I just want to summarize by saying that a lot of traders struggle with the emotional side of risk and losses. They struggle with it because they see the loss. I didn't want a loss. I didn't want to give back. God, I've had 3 losses in a row. This is terrible. They do make up a lot of stories. When I say they, I include myself in that equation. It is one of the most challenging parts of trading. It's a process of learning to trust the signals and the tools that you're using. And one of the ways you do that is you trade in simulation mode for a period of time. Could be a month, could be 3 months, until it's just second nature to you. But during that period of time while you're learning, you have not put real money at risk. You have no risk. You have no real dollar risk of losing. You're investing a little bit to follow along with us in a live trading room. You're investing a little bit to have access to the tools that New Cycle Trading offers. You are probably investing a little bit in education that we'll provide to you, but we've tried to make it very, very accessible for any trader who's serious about starting their personal trading business. But the personal trading plan helps you smooth out some of those emotional wins and loss roller coaster situations. You understand when is enough, because if I'm trading and I've started trading at say 8:45 in the morning and it's 10 o'clock and my current performance is right on target with my forecast number that says I could potentially make $200,000 this year, well, I might stop for the day. Why do I want more? When is enough enough? Trading is something that doesn't need to be just a all day long, every day, every trade. You stop when you've met a target. And the trading plan helps you determine what a reasonable profit and loss target is for the day and what your potential income is for 52 weeks. So you just saw, based on the 3 different categories that we're tracking, um, a potential income of anywhere between 135,000 and 355,000. It depends on how much time commitment, as little as 2.5 hours a day, 9:30 to noon. Some people trade less than that and they make enough to hit their goal. Remember, we started with just $5,000 in each account. And this is a comparison I've shared before, but I think it's a good comparison. Look at the 135,000 to 355,000 potential. And even if you just look at the low end of that, 135,000, according to the U.S. Department of Housing and Urban Development, the median income for a household in the United States is 78,500. That is most likely requiring 40-hour a week at least of work, and our 135,000 is basically being produced with 2.5 hours a day, 9:30 to noon. That to me is a pretty simple way to, an effective way to earn the income that you desire and have a personal trading business. So learn to trade, trade to earn. We offer futures trading education, options education, the adaptive entry system, live trading room, and the personal trading plan. We've created all these tools to help you build a personal trading business. And if you want to learn more about them, you can find more information at optionsmoneymaker.com/investor2. So I'm going to switch over to the chart. This is what we look at all day. We're available to answer questions. Before we get to the questions, I want to say hello to Aaron and Kristen. Hello,
Hello.
Aaron. Hi, Aaron. And Kristen, I want just Kristen, if you take just a minute and just tell people a little bit about your background and why you're here.
Sure. Hi, Mark, and good evening, everybody. My background is primarily in learning and development. I've known Mark for many years, worked with him in large companies and small companies where I really helped develop learning programs to help individuals achieve their goals. My history with Mark has introduced me to trading a long time ago, but just shy of a year ago, I actually wanted to also learn how to use the adaptive entry system. So I went through the futures education program online that's available to everyone. I spent about 3 weeks in sim mode training and all of that with Erin in the live trading room, learning from her, and then stayed in the live training room for quite a few months and started building my own income based on my personal trading plan. And with that, I now have the opportunity to be working with Mark and developing some other cool things here at Options Moneymaker.
Yeah, I'm very excited to have Kristen on the team. We have a fantastic team, and those of you who have worked with us before, I think, agree. We've developed some really amazing tools that help traders, and Kristen is a great addition to the team with her knowledge and aptitude of training and developing training programs, and she's immersed herself in trading. I think the very first trading you ever did with me was trading covered calls. Buying stocks and selling options against the stocks, and then got into options trading. So anyway, Kristen is just a fantastic addition to the team. So thanks for being here, Kristen.
Excited to be here, Mark.
All right, folks, we are available to answer whatever questions you may have, and look forward to seeing what's on your mind.
The first question we have is from Bob. Bob is saying, after going long on a fractal, a short momentum signal appears at the beginning of the next bar. Should I exit the long fractal and go short, or should I stay long? So all of our tracking and performance is based on prioritizing any AES signal over a fractal, including momentum. So if you're long on a fractal and a short momentum comes on at the beginning of a bar and you're still holding the fractal, all of our tracking is based on reversing the trade. And that's because momentums are going to happen when you're at the top of the Cycle Finder Plus range. A short momentum will happen when you're in the sell zone, which is anything above that red horizontal line on the Cycle Finder Plus. And then a long momentum will happen anytime, can happen anytime you're below the green horizontal line on the Cycle Finder Plus. So if you think about it, if you took a long fractal trade and then you had a short momentum, there's signals of a reversal that are already starting to appear. And so we reverse the trade. Generally, fractals are considered bonus signals, And usually what we are looking for is that sudden movement to happen when a fractal breaks. And so if you're still in the trade, that means it hasn't hit 5 points, it hasn't hit 10 points, and then you're getting a reverse signal on AES. My personal preference is to reverse and prioritize the AES. And of course, that's what we track as well.
Okay. Bob's asking, is there any experience trading after hours? Is there a better time to trade after hours based on when overseas markets open? So my opinion on that, Bob, first of all, since the beginning of our tracking, we've been tracking 3 a.m. performance through the close of the market day, or whenever we stop trading, which is generally after 3 o'clock Eastern. We don't have any tracking history on when the market opens each day, which is at 6 p.m. Eastern to 3 a.m. So anything that I would tell you would be 3 a.m. forward. So I don't know how the 6 p.m. to 3 a.m. time frame works. We've been doing some testing recently with some automated trading on overnight hours, but I don't really have an opinion on that. We can tell you what works starting at 3 a.m. because Aaron's created this tool, which helps us understand exactly what that performance is. If I looked at all, well, let's look at all plus fractals. Is that at the bottom here? There we go. Let's look at all plus fractals. And if I look at 3 a.m. to say 5 a.m. I mean, I don't know if you're interested, Bob, in looking at doing evening hours or early morning hours, but here's an example, just a random example, 3 a.m. to 5 a.m. Eastern time. For the last 203 trading days, the daily profit average is about $230. There's 63 losing days out of 203. You're going to take about 8 trades, a little over 8 trades on an average every day, and your win-loss ratio is just a little under 70%. Now let me just randomly pick, say, 4 to 6. All right, so that's reasonably similar to the 3 to 5. So, I think you're going to find that they are reasonably similar overnight numbers starting at 3 a.m. Forward, because that's when the overnight markets start to come into play. I'll just do one last one here because now I'm curious. Oops. Well, I'm just not keying properly here. Okay, so 5 to 7. This is Aaron's favorite time frame. Reasonably similar again, 60-ish plus losing days out of 230, 203 days, about 8 trades, a little less than 70%. So between 67 and 70% win-loss ratio in each of those 2-hour time frames. And they each seem to show a roughly, let's just say $220-ish, $230-ish. I think that's about the average of those 3 time frames that I evaluated. Kristen, you want to bring up Kevin's question?
Sure, Mark. Kevin is asking, Mark, which of the AES signals has the highest win rate, or can you rank each of the 4 signals in order of highest to lowest win rate? He's interested in the live trading room hours also.
Okay, so I was actually just starting to work on that, Kevin. I saw your question. So I'm going to just do this as quickly as I can here. Momentum signals 845 to 4 are 99.53 average. I'm kind of curious about this now. I'm going to go back to consensus signals 845 to 4 is 284 average. And we just have two other signals here real quick. I'll say this again. This tool that Aaron built for us makes research and making decisions based on actual data so powerful for us and us be able to share this with you. So trend bias trades, 830 to 4, averages 160. So T is 160. And then the last one would be T plus. And T plus, which is continuation signals, averages about 144. So the way I see it here, Kevin, consensus signals is by far the outperformer at about $284 a day average, followed by trend bias, followed by trend continuation, followed by momentum. That's the stack ranking, just a very quick analysis. So number 1 is consensus, number 2 is trend bias, number 3 is continuation, and number 4 is momentums. Of
And that's
course,
based on the dollar amount, right?
it
So
is.
I think
It
the win
is.
loss is actually slightly different because a lot of these are, some of them are more likely to run 10 points.
Yeah, so what was the last one I did? Continuation.
Yeah, continuation, which I think it was 77%.
Yep, so 77%. Trend is 71%. And consensus is 76%. And momentum is 72%. Now, one
So
of the things,
similar.
yeah, there's very similar. I'll comment though. Aaron's heard this before too. We have people periodically just say, "I just don't like momentum trades. I never. They don't do well. I don't do well with them. I don't make money on them." But the data would argue that. So those comments usually come from a day where maybe we had more challenges with momentum signals or they didn't work out as well. But that's why we just default to the data, which has no emotion attached to it. It is just factual data based on having tracked every single trade of every single signal since 203 trading days ago.
Rob's asking, can you show the 91% win rate on the hour in the morning? So I think what you're referring to is our 20-point profit plan, which is not limited to just an hour in the morning, but most of the time we are done within that first hour. So we have a 90%, 91% win rate on that. The days are the win rates. So that means you lose 9% of the days that you're trading, and that's out of, I had it up here, it was 100 and trying to remember how many actual trading days.
Well, you had 170 or so.
156 trading days. There have been 15 losing days with the stopping once you get at 20 points or more on the day. It actually has the same exact win rate. So same exact winning days versus losing days, with also if you stop when you're down 60. So that's kind of that sweet spot that we found. That's one of the personal trading plans that we post now, is that plus 20 minus 60, because we find that a lot of traders struggle at figuring out when they should stop. And so that gives you a stopping point on both ends. Again, 15 losing days in the past 156 trading days. So that means 91% of your days you're winning. And then you have about 9 to 10% of your days that you're losing, which is pretty significant in my opinion. That's pretty close to 100% with what we're seeing. So that is what you'll hear me call out in the live trading room when I say we're at 15 points. We only need 5 more to get to AES 20, and that's exactly what I am talking about. And Mark, if you can go to the daily summary. So Mark has it filtered.
You want it filtered?
You did the 20 to 20 points.
Yeah.
So on the 8:45 to 4, stopping at 20 points, it's not that you're adjusting any of your trading style. So sometimes you'll make more than 20 points on the day. Yesterday it was 21.25. Last week it was 25 points. So what happened with that 25-point day is that we went into the last trade with 15 points of profit. And then that last trade that we took ran 10 points. So we ended up 25 points on the day. So it won't always be 20 points, which is $400. Sometimes it'll be more than that. But that's what that 90% win rate is discussing.
I think that's a fantastic strategy, especially for someone who has a limited time or might just be starting out. Because Aaron scrubbed these numbers and did an analysis to find what we would identify as kind of an optimum balance of time committed to trading and performance. And she was able to see through all the history that we've tracked that what we refer now to AES 20, having that 20-point target and stopping when the first trade hits 20 or takes you over 20, or the follow-up analysis was where should we stop when we have losing days? And she found that if we hit 60 points of loss, that's probably where we should stop. And you can see here the history. You can see here that, the average when you blend everything is about 18.3, but these are all days that we hit 20 and we're done or more. And then there were a few days that obviously were losing. There was a 50.75 point losing day. See, those days don't bother a trader typically when they have a whole series of winning trades. And I think the most telling number of that category is 13 losing days out of 203 trading days. That's phenomenal.
And the reason our numbers are differing on the amount of losing days is that's a gross profit loss number. So the 15, so there's 2 days essentially that there you just really didn't make much. You didn't end up at 20, but you didn't get stopped out for the day. And you could see it when Mark was scrolling. It was like 0.5 was your win and 0.75. And then the commissions and fees ended up taking that slightly negative for the day. So that's why I have 2 more losing days than what we're showing on the summary, because mine is a net after commissions and fees number. So Rob, the forecast, which I'll send you the link for it, but you can view this at any time. I update it every day. The personal trading plan forecast, starting with $5,000, stopping when you're up 20 points or down 60 points, 3 contracts max, forecasts out to $185,000 in a year. And that's again, just 3 contracts max.
And Aaron, be fair with this question. What would you say is the usual amount of time that you're spending devoting to that trading?
I would say average is probably an hour. There are plenty of days we're done before market open.
Mm-hmm.
And then there's a few days where we have to trade until 11:30, and it feels like eternity, especially when the prior right, especially when the prior day we've been done in 4 trades. Yeah. But I would say it probably averages to about an hour. So I'll send you that link, Rob. It's optionsmoneymaker.com/AES-results. On there, you can view the personal trading plans that Mark showed earlier, and also the plus 20 minus 60 personal trading plan for AES. And it's including fractals too. And then also the daily summary, the monthly summary and averages of the current spreadsheet that he's showing. And then yes, that forecast is a net number. Yeah,
on the personal trading plan, I'll just go over here. where we enter the dollar value of the win or loss every day, we're also entering the total number of contracts traded. So if you have 10 trades and you did 3 contracts per trade, you've got 30 contracts. That takes into account then the cost of those contracts, paying fees and commissions to the broker and the exchange and all that. And we calculate a net. So all of the run rates and all of the forecasts in the personal trading plan are based on net after fees and commissions.
Kevin's saying if a trader wants to trade earlier in the day and also participate in the live trading room, does that require 2 subscriptions? So I think what you're saying is if you want to start trading before we open up the live trading room at 8:45, you would need access to your own AES charts. So you would need to have a subscription to the adaptive entry system. And
Members
then
of-
if a
members
trader
of our-
opts to,
Go ahead, Erin.
if a trader
Sorry.
opts to do this, so a lot of our traders have their own charts, and so they're trading on their own Infinity platform. So they're whatever futures platform they choose. I'm just using Infinity because that's what majority of our traders use. That's what we use. And then they're using their own charts. What we show in the room, they have their own version of on their computer, but they're in the live trading room. Yes, on audio, listening to Michael and I call out the signals all day, talking about, okay, we're going to adjust the stop on this one. Okay, be prepared. We might have a long signal at the next bar. So then that reinforcement that helps them know what kind of signals we could see next. If they missed that there was a fractal that formed, we're there to help point it out for them, help tell them when to adjust their stops. So it's that reinforcement, but then they can absolutely trade on their own without the live trading room, but they choose to be in the live trading room again for that reinforcement.
And Erin, I'll just add, as a participant in the live trading room for a while, one of the other great advantages is when participants send messages to you and Michael and you read them out loud. Trading in that community is really helpful when you're learning.
And I agree. I mean, because sometimes we don't think about certain things in a specific way and somebody will prompt a question, and if I can pull up the research, I'll do it on the daily summary, the tracking, I'll pull up that research. And so I feel a good way to learn is repetition, but then also when we get those questions and we ask those questions out loud so everybody knows what question was asked and we answer it, it's going to help reinforce your education as well.
Mark, Scott Ricky has a question. It says, you mentioned increasing number of contracts when using AES 20. This is outside the guidelines as shown by the personal trading plan. Any guide to how many contracts are the sweet spot?
I'm not sure what you mean, Scott, by it's outside the guidelines. The guidelines for using the personal trading plan are, first of all, set the percentage of your account balance that you are willing to allocate to the margin requirement of contracts. So we always default ours to 10%, but this is showing in blue on the worksheet, which means it's a variable field that you can set. You might want to set yours at 5%, which means that 5% of the balance of your account is then made available for contracts. So I'm going to take it back to 10, a little easier math for me here. So let's just round off. We've got about $75,000 in the account. 10% of 75,000 is 7,500. And so with $7,500 available for margin, and each contract requires $500, the account is allowing me to trade up to 15 contracts. But I'm limiting myself to 3 contracts. I could increase that to whatever I want. But if I were to say increase it to 50 contracts, well, it's not going to immediately scale me up to 50 contracts. It's still going to be scaling based on the percentage of the balance of the account that is being allocated to contracts. So the two factors that are controlling this are percentage of the balance of the account, and then what you decide is your optimum number of contracts to trade. I don't think, Scott, that there is any one optimum number of contracts, a sweet spot for number of contracts. I personally don't think anybody needs to trade more than 10 contracts. 3 is kind of a nice number that gives us a really nice outcome. 3, in my opinion, is a comfortable number. It's $1,500 a margin. And, you take into account the stop losses that we use, size of the account, and, what could we possibly experience on a losing day. 3 is kind of where we settled, but there's no magic to 3. It's just what we feel comfortable with. Plus, we're also giving we're using this as an opportunity to give an example and demonstrate for you how effective the personal trading plan is, and it's a translation of the performance of the personal trading plan, of the adaptive entry system. So if I didn't answer your question correctly, Scott, or if I misunderstood it, let's try again. But I don't think there is a sweet spot for contracts, and I'm not sure what you mean by it's outside the guidelines.
Bob is asking, where can I get instructions for setting up the alarms? I think you mean the alerts for AES. It's included in the AES instructional video. And then there's also a separate link on New Cycle Trading's website, newcycletrading.com/alert-setup. That will tell you how to set up the alerts on all of the New Cycle Trading indicators. Mark, for subscription costs, they would go to Investor2, that link you showed earlier. Is that correct?
Yes. Yeah. If you're already in the live trading room, Kevin, and you want to subscribe to the adaptive entry system so that you have your own charts, I think it's $5.97 a month to New Cycle Trading and Analytics. I'm going to put the link up here, Kevin. optionsmoneymaker.com/investor2, and you can get information on all of the primary services that we offer, including the adaptive entry system right here. You can learn more about it. You can view performance of it, and it allows you right from that link to sign up for it if you choose.
Stan's saying, as I've traded 3 contracts, the slippage is such that I usually get 1 or 2 contracts at one price and the remaining one at a tick different. It occurs both entering and exiting. Have you encountered the same slippage?
Absolutely. When you trade more contracts, you're not going to get them all the time at exactly the same price. You're generally going to get them within 1, 2, or 3 ticks of each other. But I'm going to talk about slippage here in just a minute. I just have a philosophy about slippage that it really is not a big deal. There are unusual situations where the market is just on fire and you might have 3 or 4 or even 5 points of slippage. I think 2 weeks ago I had a trade that I had 7 points of slippage, and before I could even mentally calculate where I was versus the open of the bar, it had already hit my 10-point profit target. So if you have significant slippage, it generally means that the market's moving more rapidly and there still is opportunity to lock in your 5 points or possibly take 10 points. I don't think slippage is a big factor. Most traders, especially newer traders, seem to get fixated on slippage as a factor, but it's kind of like we want to tell the bad news, we don't want to tell the good news. I also have slippage where I have a half, 3/4, or 1 point of favorable slippage, and so you got to kind of take both sides of that. Bottom line is, even if every single trade you had 2 ticks of slippage, and you were able to lock in at 5 points with Aaron, and so your performance, your actual live performance in your account was 4.5 points on every trade, you're going to do very well, because your win-loss percentage is still going to be basically the same as ours. And so I would say, don't focus on slippage, take what's there, and you should still do very well. And pay attention to the favorable slippage also.
I agree. I think people get hung up on the negative slippage, but then don't factor in that they're getting favorable slippage too. And it's not going to necessarily even out on the same day, but over the course of trading, I feel like it absolutely evens itself out. I know there was a day where I messaged Mark and I said, I've had a favorable fill in every single trade today. And and I personally still trade based on the open of the bar. Exactly what we track and call out is exactly what I am trading. So that means if I have a point of favorable slippage, I might take 6 or 11 points on the trade. If I have a point of negative slippage, I might take 4 points or 9 points on the trade. Sometimes the market moves just so wonderfully quick to that 10-point profit target that you'll have negative slippage, but it doesn't matter because it just wants to go that direction anyway, that you're out for 10 points based on your entry. I know I announced that in the room. I said, okay, so I had quite a bit of slippage there, but I still made 10 points because there was no opportunity to adjust anything. We just went there. Market was happy in that direction.
Yeah, and Stan, I realize you weren't saying it was an issue. I was just using the topic to kind of express a point of view on something that we hear quite frequently. And in the live trading room, I know Aaron hears people say, oh, well, I had 3 ticks of slippage, and how do I avoid that? I don't think there's any way to avoid it if you are being diligent about setting up or preparing for the upcoming trade. Aaron's really good about calling out what the next trade is going to likely be. And if you're diligent about that, listen, I've had trades where I go back and look at my trade log and I see that I was filled at exactly the open of the bar, no seconds after it. And I've had 3 points of slippage in a very fast moving market right at the open of the bar. That's just a reality.
Kevin's saying, one of my reasons for the interest in my own AES subscription is also maybe the signals may be displayed quicker because I won't be on a Zoom connection. So it will display a fraction of a second quicker. It all depends on your internet service provider, not just your internet speed, but your latency, the ping that it takes from you to go to you and the internet and then back. So I watch the charts through one computer that I'm signed into Zoom, and then I have my own charts. I trade off of my own charts, but if something ever happens where my computer decides to not be friendly and I need to just look at the charts in the room, it's probably a fraction of a second different between the signal of when it would normally come on and when I see it through the room. And just because we are streaming to you, and so there's just a slight potential for a delay there. However, it shouldn't be so detrimental to your trading that you can't use it that way. I still am able to get in at 0-0 is what I'm saying, basically, even if I am trading, watching the charts through the room. And I'm not talking about when I'm posting my own charts. I'm talking about when Michael, who doesn't live anywhere near me, is showing his charts.
All right, Fergal, well, thank you for being here with us for a little while this evening. Thanks for being part of our community too. Have a great evening.
Mark Donald is asking, do you need a TradingView subscription to see the chart that's being shown?
The simple answer is yes. Yes, you do. So when New Cycle Trading and Analytics built the adaptive entry system, we were looking for a very simple, user-friendly way to present it to our potential subscribers. And we opted to use the TradingView platform, and you can customize signals, alerts, and systems within TradingView, and that's what we've done. So you have to have a TradingView subscription, which is really inexpensive. And it's inexpensive including the real-time data feed. And then you subscribe to the adaptive entry system through New Cycle Trading, and you'll receive authorization to download. It's called an invite-only script, and once we have you logged in our preferred invitees, we will give you access to the adaptive entry system. Once you sign up for the adaptive entry system, you'll get very thorough and detailed instructions on what you need to do. My suggestion would be, if you're wanting to sign up for AES, sign up for AES first before you set up your TradingView account. We've got some links where you can more easily set up the TradingView account using our links.
Yeah, I was going to say that because they'll give you, when you sign up for AES, you'll get the link to sign up for a free 30-day trial TradingView if you haven't used one before, and also walk you through exactly what data feed you need for the NQ futures and then how to put AES on charts. It's easiest to start that way because the New Cycle Trading will walk you through everything you need. Mark, I have a few questions here from Jen, so I'm gonna ask
okay.
them one by one.
Okay.
You have all the trade results from every trade on every day. I'm wondering if the AES data from the first 1 hour of trading correlated with successful or unsuccessful days. So for example, if the first hour from 9 a.m. to 10 a.m. the trading gives us a success of probability for the following 1, 2, or 3 hours.
I would say that we don't have that level of analysis where in the first hour of trading, it's going to be a predictor of what the day is going to be like. We have days that we've experienced where, you know, we're down 40 points in the day, and at the end of the day, we can be strongly positive because in that particular day, whatever was affecting the market movements didn't last the whole day. We have other days where it seems like every trade we trade is a winner at the beginning of the day, and then it feels like we gave back at the end of the day. One of the ways to evaluate the last part there is, let me take off the 20 here just for a second and go to the daily summary. One of the things, features that Erin built into this, which I find really interesting, is she's able to capture what the maximum profit was at any point in time during the day. Now this is from 8:45 to 4, trading all of the adaptive entry system signals and fractals. So just using today as an example, we finished the day. What time did you stop trading today, Erin? 3:30 or so?
Yeah, we didn't take a 3:30 trade because we had
3:15
about,
was the last trade.
yeah, thank you.
Okay, so at the end of our day, we were positive 22.5 points. That's fantastic. Earlier in the day, we were up 41.25. Yesterday, we finished 88 points. Nobody would ever argue, in my opinion, or in their right mind, that 88 points wasn't enough, but at some point during the day, we were positive 116 points. So you have other situations where here we were down 40 points at one point during the day, but we finished the day positive 35 points. Here we were down 30 points at some point during the day. End of day, we're up 70 points. So I think the simple answer to your question is I don't see, I have not yet seen that our data and an analysis of our data allows us to say, we're not going to trade today because the first hour has revealed that the day isn't going to be good for us. So I just don't see that.
I would agree, especially because I know there are.
Erin cut out.
But it happens. And then we start getting gains, and each.
Hey, Erin, if you can hear me, I think you're cutting out a bit. Coming in and out. I think
Am I back?
You're back. So
the quick summary is we can
yeah.
start down and then have basically 100% win rate for the rest of the day.
Exactly. And Aaron shows, and it's made available to you online, the detail every day, and you can kind of see the progression, you know. Today, starting at 3 o'clock, now nobody's really going to start trading at 3 o'clock usually, but if we did, you can see that starting at 3 a.m. this morning, you know, we're down almost 20 points in the first couple hours. By the end of the day, you know, we're up 36 points, taking everything into account. So eh, my summary of that is trade the signals during the period of time that you want to trade. Accept the fact that you're going to have winning days and losing days. The AES 20 in particular, you're going to have losing days, but it's a small number of losing days, small percentage of losing days. You had a 91% win rate. That's all I would focus on, and I wouldn't invest a lot of time in trying to figure out or anticipate what the market's going to do the rest of today.
Yeah, I see that Jen, you're trying to find a higher success rate because you had 2 losing days. And if that's what you're looking for, I would personally do the AES 20. So AES 20 averages 18, 19 points a day. Trading all day averages 43 points. If you want the 43 points, trade 2 contracts or 3 contracts to get closer to that with the AES 20, because we talked about this earlier. The AES 20 has a 90% win rate, which means that 10% of the days will be losing, 90% will be winning. And in my opinion, that is statistically very close to 100% for trading. And there's not much that gets, I don't think, close to that. So if your concern is that you had 2 losing days and that you want something with a higher success rate, then I would highly encourage the AES 20, where you stop at 20 points, because it had 15 losing days in the past 156 trading days. So I think that's what that basically answers your question, is to see if there's any AES success patterns. That's basically what we've done. We found that 20-60, 20 on the positive side, stopping when you get 20 points or more, stopping when you get negative 60 or more. That is the analysis that we've done for a very high success rate. Frank, there's a couple of places you can go. Frank is asking, where do you find the daily performance results? So you can go on to Options Moneymaker's website, and there's an AE, where is it? There is, under News and Results, you can see the AES trade results. You can also just go to optionsmoneymaker.com /AES-results, or New Cycle Trading, same thing, newcycletrading.com /AES-results. And it shows the personal trading plan that Mark showed earlier. And yeah, if you click that AES like trade results, Mark.
Isn't that what I just, oh, right here. Is that what you wanted?
No, AES trade results in the category on the top.
Right here, okay.
And then click on daily performance spreadsheet. Click here to view the daily performance spreadsheet. No, the link below that.
I clicked the wrong one.
Yeah, it's okay.
There we go.
But and then we just recommend you bookmark this, optionsmoneymaker.com /AES-results. If there's one on New Cycle Trading, that's same thing, newcycletrading.com /AES-results. Shows the personal trading plans, and it shows them the daily summary, the monthly summary, and the averages of our most common time periods. So you have the daily summary of the time periods that we do the personal trading plan for, the 9 to noon. All signals, no fractals. The 7 to 4, trend bias and continuation. The 7 to 4, all signals, which we don't have a personal trading plan for, but kind of just shows you everything when the market really starts to pick up in the morning at 7. And then of course our 8:45 to 4, all signals and fractals. That's what we call out every day in the live trading room. And then the 8:45 to 4, all signals and fractals stopping at 20 points of profit. So that's all on the daily performance there. And then there's also the monthly performance for that as well. And then the averages. And then at the top is the personal trading plans, the ones that Mark talked about earlier, plus the my personal trading plan, the stopping at plus 20 or down 60. Oh, thank you, Christian. Christian saying, and if you're new to AES, I recommend joining the live trading room for at least a few weeks so you can learn the signals from Erin. She is amazing at seeing the setups early. If not, you might be late on some entries until you get the signals down. Erin will save you money helping you recognize the signals early and prep your down. Thank you, Christian. Thank you so much.
Thanks, Christian.
Rob, you're probably looking at the forecast for a specific date. What am I don't know what 400 times 252 trading days.
20 points a day, $20 a point, $400, 252 trading days.
Oh,
Well, you haven't scaled contracts, though,
right.
Rob. In Aaron's plan, which is shown right here, we're scaling contracts. So you get to that point where 10% of the balance of the account would accommodate the margin requirement on 2 contracts, or 10% of the balance of the account would 10% of the balance of the account would accommodate 3 contracts and the margin requirement there. So the personal trading plan is scaling in that way. You don't have to scale. You don't have to do that. But with scaling based on a maximum of 3 contracts, it's an estimate of about 185,000.
Michael is asking if he does purchase his own personal trading plan, could we supply him with initial data so he could do his own research and find his own sweet spot?
It's right here, Michael. And the link that Aaron just provided at the Options Moneymaker website in news and results, it's right here. And you can choose whatever you want. If you prefer to trade 9:30 to noon, if you prefer to trade 7 to 4, but only take 2 of the 4 adaptive entry system signals, or if you want to trade the live trading room hours, AES signals, and fractals, all of that data is right here. It's detailed day-by-day data. We've got run rates, for 13.5 weeks in one category and for 39.5 weeks in the other 2 categories. So if that's what you want to use as a starting point, which I think is actually really smart, you can use those values as a starting point for your own personal forecast, and then take a look after trading for a period of time, however long you choose, in sim mode. And if you trade in sim mode for a period of time, then you'll start to develop your own run rates.
And it has even the, if you scroll to the right a little bit, Mark, on that personal trading plan, it has the profit that we put in and the amount of contracts based on the amount of contracts we were trading that day.
Mm-hmm.
So if you want to scale up quicker, you want to scale up to 5 contracts, you can always adjust those numbers to fit what you're looking for in your personal trading plan, but all the information's there.
Well, now, Christian, don't give me an incentive. We love having you here, Christian. And Stan, I'll just share this. Stan says he agrees 100% with what Christian was saying. He learns from Aaron every day. He listens in. So thank you for sharing that too. Hi, folks. I don't see any other questions or comments out there. I think we're going to go ahead and call it a day. Sincerely appreciate all of you being part of our community of traders. We are committed to helping you learn how to trade and trade to earn. And that's what we work on every day. Most of our focus and attention is on teaching you directly how to use tools that we believe are ideal and optimum for you building a personal trading business. You have to bring to the equation a willingness to learn, a commitment to stay the course, and a commitment to do smart things, be wise about your trading. One of the best, and I think most wise things you could do is to trade in sim mode for a period of time until trading feels pretty natural to you, second nature. And then you put real money into it. You're going to have a good experience rate. And even if your first winning day, if your first real money day is a losing day, you have an experience rate to step off of. It's not something where you're just holding your breath and hoping it's going to work out. You already know that it's working. And if you didn't think it was working, you're not going to put real money into it until you're convinced and have seen it work for yourself. So we're here to help you. And we appreciate being given the opportunity to do that. So Aaron, thank you for all you do. And Kristen, thanks for being here, and looking forward to all the things you're going to do for everybody in our community.